Hey, what's up YouTube? It's your girl Dom back with another Forex trading strategy video. It is Sunday, October 2nd, and as you guys can clearly see, I'm getting ready for Halloween. I do have on this highlighter green hair today, so be on the lookout for my special effects videos coming up, but that's not why you guys are here. You guys are here to talk about trading, so let's run into it. If you guys are new to the channel, I do start off by going through what we can expect for the news. I do use the Forex Factory to get all of my economical news. We're going to take a look at the US dollar. We're going to review the last video, the last pair that we did our video on. Then we're going to take a look at our new pair. I'm going to go ahead and mark up the charts, and then we're going to start our trading strategy. So let's go ahead and jump into this video. So, like I said, I do use the Forex Factory to get all of my economical news, so that is where we're starting this video off. So, today is Sunday, and for the Australian dollar, we have a bank holiday. Later this evening, for the Swiss franc, we have some CPIs. Those are core economical data points. That way we can gauge how good their economy is. Tomorrow, Monday, we have a German bank holiday. 7 o'clock a.m. for the US dollar, we have the ISM manufacturing PMIs. Again, these are data points to gauge how well the manufacturing side of the economy is doing. Let's see, 8:30 for the Australian dollar, we have cash rate and the cash rate statement. That's going to be big. That's going to cause major volatility, so be on the lookout for that if you're trading any Aussie dollar pairs. Tuesday, October 4th, we have an FOMC member speaking, and then at 7 we have the JOLTS job openings report. That's going to cause major volatility because half of our economy is gauged on are the American people working or not, so that's going to be big. Let's see, 6 o'clock for the New Zealand dollar, we also have the official cash rate statements. That one's going to be big. Wednesday, October 5th, we have the Organization of Petroleum and Economies Exchange. They have their meeting. This only happens twice a year, so this one's going to be big. At 5 in the morning, whew, that's early. For the US dollar, we have the ADP, non-farm employment change. It's going to cause major volatility. 7 o'clock, we have the ISM services PMIs. We also have another bank holiday. For the Japanese yen, the Bank of Japan's governor is going to speak. That could cause some movement in the market. Thursday, pretty light. Let's see, we have the monetary policy meetings for the euro, unemployment change for the US dollar. For Canada, they have PMIs, US dollar. We have another FOMC member speaking, another bank holiday. So Thursday is actually pretty light. Friday, we got some heavy stuff. We got our heavy hitters coming in at 5 in the morning for the CAD, the Canadian dollar, and the US dollar. We have unemployment change, the unemployment change rate. We have the average hourly earnings, the non-farm employment change, and the unemployment rate. Now, this is one of those cycles where the Canadian dollar and the US dollar happen to pull out both of these reports at the same time. So Friday is going to be a heavy day, let me tell you. Saturday, nothing. Sunday, we'll look into that next week. So now we're going to go ahead and take a look at the US dollar, what's going on there. And I use Smart Trader, but feel free to use any trading platform or markup platform that you have. TradingView is also good. All right, US dollar, what's going on? Now, we have been following this for a while now. And let's see. So I think the last time I did this video, price was here at some point. Yeah, because this was September 18th, and that was the last day that I did my video. And I was trying to see if we were going to get a retracement or not. We're going to get that slide pull back into the zone, but we didn't. It just kept going. It was bullish. we did hit that all-time high here of 13,389. On that A to B move, we did get a slight pullback to 236. Price retested that original B boundary, and now we're in a retracement zone. Now, let's see, we are down to the 382. Now we could get price to start to push up to this new D extension, or price could potentially still come back and get a deeper retracement to the 50% level or the 61.8, which is our golden spot. Let's go ahead and take a look at the 1 hour. And as you guys can see, we came back to retest this level, and right now we're moving a little sideways. So what you could do to figure out where the dollar is going next, pop this trend line like that. And the way I draw my trend lines, I go from the most recent swing high to the most recent swing low. As soon as you get a touch, you make a new trend line. So if I'm going from here, let me show you. You pull the trend line all the way out. Actually, right there. Pull a trend line all the way out and go down until you get that first touch. And you're only going to meet the price where the most recent low is. So that's right here, because our most recent low is right here. So if we get a break of the trend line and a retest, we could possibly see the dollar keep moving bullish. Otherwise, if it just stays along this trend line and it will come down, you know, but we'll be in a retracement. So let's see on the 15, it's also moving sideways. See, we got that touch and then it was immediately rejected. So I'm thinking we're moving back down to retest this all-time high, well, previous all-time high level again. And once we get back into the zone, we have to see what prices will go next. So that is the US dollar. We are still bullish. Overall, we were just in a retracement zone. So now we need to see, since we broke this level, we had a retest, right? We need to see, are we gonna retest this level again? Is this new level of support going to hold, or will the dollar pass down this zone into a deeper retracement, forming a new level of resistance? So we will have to wait and see. Okay, on that Aussie CAD, in my last video, I said we were bearish. Now, I think price was somewhere in here. We're looking at the 1 hour. We're looking at the 4 hour. So, let me see. So I did draw some trend. Oh my goodness, this looks a hot mess. So I did say we were bearish on the Aussie CAD. Now price was in this area right here last time I did my video, and I did say, stay on page. I did say although we are bearish, it still might move up to retest some of these trend lines, which it did, and now we're moving back down. So let's see what actually happened. So yes, price was here. Actually, let me see, because I did my last video on the 1 hour. I said the Aussie was bearish to the CAD. I did say there was a possibility that it would move up to retest some of these trend lines, and that's exactly what happened. We got that last test of the trend line on Thursday, September 22nd, and mind you, my last video was about 2 weeks ago. Now that we got that last touch of the trend line here, right up in there, we see that we're moving bearish. So we're still on our way down. It looks like we are going to retest this 4 hour support here and then make our way down to the extension here. So that is the Aussie CAD. Still bearish. Now for the new pair, we're actually going to look at the euro dollar just to see what's going on there. And as you guys can see, On this account, I have not marked up this chart at all. So that's what I'm going to do, and I will fast forward this. That way you guys don't have to sit and watch the entire thing, but I will be highlighting all the key areas of support and resistance. So now that I have gotten all of my support and resistance lines, I'm going to go ahead and do my trend lines. Basically, I am going from the highest high. Well, I want to make sure I get my directional bias correctly. So I am going to go from the monthly time frame, and I'm going to work my way down. Now, when I'm doing my trend lines, I do go from a swing high to a swing low. And just to show you an example of what a swing high and swing low looks like, this right here, right there, is considered a swing low, right? We have one low center candle, two candles to the right that are higher, two candles to the left that are higher. This would be considered a swing low. Now on a swing high, would be something like this, and these are like high probability like reversal points. So I have this one right here, two to the left that are lower, two to the right that are lower. This is my highest center candle there. This would be considered a swing high. So when I'm doing my trend lines, that's what I'm looking for. And I'm going from the highest high, which is here. Well, okay, I could go from here, right? But I already know this trend line was broken, because you can see the trend was going up here, boom, 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 and it got broken here, and we've been going down ever since. So since July of 2028, the euro has been going down against the dollar. So take our trend line, pull it out. Got our first touch there. Now I'm gonna go down to my daily just so I can get a better idea of what's going on. And sometimes I actually make my trend lines a little bit too long. I have issues adjusting them, so I'm bring it in like that. Now that we have a new touch there, do another trend line until we get our first touch. Which is right here, right? Another trend line. And we're only doing this until we can get the most recent touch up until the lowest low, which is right here. Trying to get all the way out. And we got our first touch there. To make sure that's accurate. So you can see, boom, 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 we're on a downward trend. The euro is going down, 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 down. So now that we have our directional bias, we're gonna go back And I like to use the Fibonacci sequence. That gives me the most accurate timing on my entries and exits. So from the monthly time frame, when the trend started, that's where I'm going to drop my fib. So as you guys can see, this fib was not broken. Yeah, this fib was broken because it was supposed to go down and it went up instead. So we're going to keep going until we can find our fib sequence, which is right here. So now on a monthly time frame, on an A to B move, we got that C retracement. C is the highest point in a downtrend between the A and B boundary. So on an A to B, C is as highest here. We got a retracement to the 382 level, and we've been going down. Came back to retest that 382 level again in 2021, and we're still moving down. So the projected D extension on that monthly time frame is going to be right here, that 0.6862, and that's the D extension of the 168 level. On our monthly time frame, we're going to pull our fib from the same location. That way we make sure we're on, we have the most accurate cycle. Go ahead and drop that fib again. And the more you move down in the time frames, the more the fibs are going to be broken. So you might have to move them out a little bit to make sure we're on the right sequence. So boom, got broken here. And I've been doing this a long time, so I know the fibs are going to start somewhere over here. But just to be accurate, we'll do it anyway. See, boom, 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 and then it got broken here, and now it's up here. So we're gonna drop another one. Got broken here. So this is my most recent fib cycle. This is where it's gonna start, and it just so happens to be where we got our trend line touch as well. So as you guys can see, on the most recent Fibonacci sequence, we hit that D extension, right? Which is here. Let me drop a line on that. Our D extension. Let me change it. That way we don't get confused. Still confusing. Hold up. Okay, green. Alright, the extension was here. And you guys see we hit that, right? And we got a reaction. On a downtrend, after we hit that D extension, we couldn't close behind it, so we might be in a upward retracement. So let's take a look at what's going on the daily. From the daily, we're gonna start that from here again. This is our most recent fib sequence. All right, so on an A to B move, we got a 382 retracement here, and we're moving down. Our D extension is right here, and this is for that daily D extension. I should probably write on these. The weekly D and the daily D. Right, so we hit that D extension on that weekly time frame. We're waiting for a new AB boundary to form, but on that daily time frame, we're still in it, right? So we see price has been moving up to that trend line and has been rejected, moving up to the trend line and has been rejected. So what do you think we're doing now? I'm thinking we're gonna work our way up back to this trend line again and get rejected. Again, I am bearish on the euro dollar. There's a lot of things going on with the euro, especially with their cash policy statements. their rate statements, and the US dollar has been very hawkish. The Feds have been hawkish, and there are a lot of other financial institutions that are trying to catch up to the US dollar, so everything else is kind of just weak. So overall, I'm bearish on the I'm bearish on the euro. But let's see if we can take advantage of what's going on here. So we just broke through a couple of different 4-hour resistance zones, support levels, and we have a few more to go through before we can retest this trend line. So let's see. We just missed a really good entry point here, and this was on Tuesday after it hit that daily support zone here. So let's take a look at the 4-hour, see if we can find some opportunities to get in. And we're gonna take the fib from the same spot. There. So on that 4-hour time frame, on that A to B move, price is retracing to the 382. Now we just you know what, did we even actually hit that level? No, we did not. We did not get a 382. We fell just shy of that, and we broke through that 4-hour support zone. I'm looking at it's gonna move to retest it. We might still get that push up to the 61.8 level, which is along the lines of our trend line, before we fall short to that the extension down here. But I'm not really seeing a good entry point right here, just because it's in the middle of two different support and resistance zones. I would rather wait for it to either touch this zone here and get rejected on that next swing low, or wait for it to retest this to see if it's going up or down. Right now I don't have a clear idea of which way it's going, so we're going to go ahead and take a look at the 1-hour time frame to see if it's, you know, a better opportunity. And just because this is the 1 hour, I know it's going to get broken a whole bunch of times. I know it's going to break here. I know it's going to break here. But let's try it anyway. Yep. Let's see. So the Fib did get broken here because it's going the opposite way. So what you could do is you could drop a reverse Fib to see if we can find a better point. Now, on a reverse Fib, on A to B move, we got price to actually push up to that 127 zone here, come all the way down, retest this 382, and now it's moving back up. So I'm thinking on this reverse Fib, we're gonna meet this D extension here, or at least we're gonna come back up here to retest this 4-hour resistance zone. So I would wait until we get that touch somewhere up in here. If you do find that price is still moving up, then cool. We know that it's going to go up to this trend line here before it ultimately gets rejected again. Remember, there is a bunch of stuff going on next week for the US dollar. If we go back to the Forex factor, remember we have the NFP this week, we have the unemployment rate this week, we have the PMIs coming out, the ADP. So there's a bunch of stuff going, job openings, there's a bunch of stuff going on for the US dollar that could add some major volatility. So there is a big possibility of this pair moving up, because numbers are not going to be in favor of the US dollar, hitting this trend line, and then ultimately the US dollar catching steam again in the next week, and then pushing that euro back down. So right now it is a wait and see. Overall I'm bearish on the euro dollar, but on a counter trend, I would suspect that this pair is going to move up into a couple of these zones, ultimately touching that trend line and then being rejected again. So That's how I would play it. So yeah, that has been my euro dollar. I really hope you guys enjoyed this video and it was informational for you. If you felt like you learned something today, please go ahead, drop a comment down below, or just give me a like. That way I know I'm reaching some people out there. I do this for you guys, and I really hope you guys enjoyed this video. So we will be back next Sunday so we can review what's going on with the euro dollar and take a look at a new trading pair. All right, bye you guys.